Stock markets are being kept alive at this time by none other than the corporations themselves. In an unprecedented accumulation of stock buybacks, which are at levels not seen since, you guessed it, 2007. These days, it's becoming odd to see indicators which do not match up with the financial crisis. The similarities have become so frequent and obvious, it's hard to ignore, except if you have all your savings in the market. Currently, funds are being withdrawn at a rate which would be the largest quarterly amount ever. Real money is pulling out. That's the deflation. Central banks will have to fill in the void. That's the inflation. Brace yourselves for a bumpy ride on this roller coaster. You came here for the truth, so let me unveil that for you. We are going to talk about the stock market today and how it is being supported by the companies using their stock buybacks. Simultaneously, we have this issue where real money is pulling out. Let's get into it right here. Out of Bloomberg, corporate buybacks poised to surpass the all-time high in 2007. Let's stop right there for a second. How many times have you heard me say this is just like 2007? Contrast to fund outflows running at almost the fastest rate ever. So it may hit there, it may not, but it shows you a signal that is very serious. Why? Because you have real money pulling out. Not central bank money, not corporate buybacks. You're actually talking about real money. Demand for U.S. shares among companies and individuals is diverging at a rate that may be without precedent. Another sign of how crucial buybacks are in propping up the bull market as it enters in its 8th year. So things could definitely change by the end of the year. We don't know exactly where it will go, but we have seen year over year that stock buybacks have become a very important part of this boom that is going on within the markets. And it gets into more information here, just suggesting 165 billion of stocks this quarter. But they're in contrast with rampant selling by clients of mutual and exchange traded funds, ETFs, who, after pulling 40 billion since January, are on pace for one of the biggest quarterly withdrawals ever. Let's get to a chart version of this right here. Bull market's only buyer. Corporate buybacks poised to top the 2007 peak. And it doesn't surprise me that it is a very sharp peak right there at the 2007 point. That's always what happens, I find, is that whenever things get a little crazy in any bull market, you see at the last period of time where it sort of goes parabolic up in a direction. Here, didn't have much time to do so before things began to fall, but it just shows you how quickly it goes up, it goes down even faster. And we have seen since 2009, that low point, these stock buybacks slowly but surely starting to take hold yet again. And we're hitting that level right about now. Very interesting to see the reality, because when you talk to somebody about this so-called bull market in the stocks, they won't address this. And they'll say, look, I don't care who's buying the stocks as long as the numbers on my screen are what I need them to be. And they look at 200-day moving averages and 50-day moving averages and all this silliness. And they're not addressing the actual real situation. Let's look at this. We have problems in the government's public sector, private sector as well, where there's too much debt. So how do you fix that? Well, of course, you introduce more taxation. At least that's what they always suggest. CBO suggests taxing drivers by the mile. Remember, and I'm sure there are many here who have heard me say this not once, not twice, but probably 20 times over the past year or two, talking about how they're going to tax drivers by the mile. And if you want to control how far people move, if you want to control everything that people do moving from one place to another, you tax them by the mile. And this is a policy that has been suggested many times before, and I'm just highlighting it. The CBO suggested on Monday that the federal government could start charging people based on how far they drive in order to generate more government revenues to spend on highway projects. Now, this is very interesting. They're making a suggestion that, this is for tax revenue, and of course, it certainly could, but the real agenda is 21. And if you know what I'm talking about there, it's that Agenda 21 by the UN, who we'll talk about in a moment, is really there to control where people live. You want them to live in mega cities and have the mega cities connected by very few methods of transportation, hopefully only one in certain areas, but basically you want them to travel across some sort of mass transportation system, trains or what have you. But I see it going in that direction, definitely, despite the fact that cities are definitely sprawling. It can change very quickly, in fact, doing something like this, implementing it. So we'll see what happens with that. I talked about a connected issue in my book, and that is carbon taxes. So when they suggest introducing new forms of taxation, these are not necessarily to improve the economy in any way. Look at the instance with carbon taxes. Australia had implemented them back in 2012, and I talked about that implementation prior to its actual, being implemented in Australia. The book was written prior, but what I said was that if you implement carbon taxes in any country, in Australia as this example, all you do is push jobs over to places where they don't have carbon taxes. Because if you're a business, if you're a big business, you really don't care about the people that work for your business. You're simply there to appease the shareholders. And that's exactly what has been done, and it will happen again. But many countries like Canada, for example, have hidden carbon taxes that sort of get all congealed, let's call it, with the price of the particular goods. So you don't necessarily see it there, or you may, as the eco-handling fees and all of this. You tend to find that they'll sneak it in and they don't have to call it a carbon tax. That's what's happening right now, just more taxation, and it's there for, number one, to fund themselves, but also the wider agenda, and that is 21. 6 months after giving birth to a cluster of nebulous sustainable development goals that aim to dramatically change the economic, social, and environmental course of the planet, the United Nations is working on a drastic renovation of global data gathering to measure progress against its sweeping international agenda. So, we're talking about gathering data. We all know what happened with the NSA and how they were stealing everyone's information. And guess what? Did any of that stop? Absolutely not. In fact, it's probably increased since then. One of the things that really upset me about this, number one, is that the UN is a set of unelected people. You and I don't have a vote, even if it was fraudulent, to determine who stands at the UN. What are they deciding? Well, they say that, they don't really make laws. They don't have any power. Ultimately, they're ceremonial, this and that. But it's just like the queen, just like the monarchy. What they say often goes. They have the highest people in positions of power that work for your government and mine. And then they come back after their meetings there and attempt to implement those laws or those treaties here as laws. That's their objective, and oftentimes it happens. They sneak it in sometimes, but ultimately they get their way. One of the things that really irked me, and the reason why I included in this video, is that they talked about a global citizenship, and that is a quote, global citizenship. But of course, if you talk about a global agenda in this way, global government, global governance, that's a conspiracy theory. But when you talk about global citizenship, that's okay. Let's move on. The implementation of automation and robotics and everything else is a detriment in some ways. Of course, it has positive things. I've covered this here before. I keep bringing it up. And yet again, we have the elimination of more jobs. So-called Robo-advice has resulted in hundreds of job cuts at Royal Bank of Scotland, RBS, just as the regulator gave its blessing to the technology. So as soon as they hired these, they implemented this service, immediately they probably already had it pre-planned. 220 face-to-face advisors gone, fired. And do you think that all companies are not going to implement this? Of course. They're going to implement it as soon as possible. As long as other companies are taking it up and you have clients adopting it, they are going to bring this on because it's a lot cheaper and safer from that company's point of view. And it's a trend. It's a growing trend. This is 2 articles that I want to talk about China. Unease over Chinese investors buying farms down under. With the Chinese buyers eyeing farmland in Australia and New Zealand, authorities are coming under growing pressure to balance the need for foreign investment against accusations of selling out. So this is a big piece of land here, and that just happens to be one example. But Chinese buyers, businessmen, investors are going all across the world to purchase large swaths of land. Big businesses, real estate in general, are being purchased by Chinese. So this is interesting, the way that this is taking place. What does this all mean? In the short term, really nothing. In fact, they're oftentimes supporting the markets. Look at the Canadian housing market, particularly in Vancouver, being supported by foreign investors at this time. So, on the surface level, there's nothing much to worry about, but what the authorities, or some individuals anyway, here are concerned about is that in this case, there's actually an overlap in the land with the military, and that is obviously a cause for concern. Whenever you have foreign buyers getting anywhere near your own military, it is an issue. And of course, you don't want them near any foreign buyer near your sort of government agencies or military, because there is a conflict of interest there, definitely. Chinese owner of Waldorf Astoria bets big on more U.S. hotels. I did cover this recently, has agreed to sell these hotels in a deal valued at $6.5 billion just months after buying it, according to a person with knowledge. And it basically goes on to talk about more deals which will be taking place. So we have oftentimes Chinese businesses or investors buying up some of the biggest assets that are available. Why? Because there's a time now where they're able to remove more money. There are certain loopholes. They're able to move more money out of the country, and they want to diversify out. And they're choosing oftentimes real estate or real estate type investments, whether it's land or what have you. So this is something to watch. Note that it's not just important to look at your own country's assets and where the money is moving, but look at others. Because as, for example, as soon as they lifted China from being able to basically that sort of cap and how much they're allowed to move out of their country, they raised it for a period of time. Of course, right away, money started fleeing out. And they do so intentionally in the government sector. They allow this because they know what's going to happen and they can control their currency value as a result. If you found this video informative, please give me a thumbs up. And last but not least, if you found the video informative, you will definitely find my book, The Money GPS, even more informative. Head over to Amazon. You can see the look inside feature, which will allow you to flip through the pages of the book and see if you like it. Take care.